You're welcome to Business Simplified. Let's explore business objectives. We are going to look at what they are, why they differ across different types of businesses, and why setting clear objectives is one of the most powerful things a business can do. Let's start with private sector businesses. These are businesses owned by individuals or groups of shareholders, and they operate in a competitive market. Think of companies like a local supermarket, a manufacturing firm, or a tech startup. Now, the main objectives of a private sector business include profit, growth, survival, market share, and corporate social responsibility. Now, for profit, it is usually the primary objective. Without a profit, a business cannot sustain itself, pay its workers, or even invest in the future. Profit is the reward for the risk an entrepreneur takes. Second is growth. This refers to the desire to expand, opening new branches, increasing sales, entering new markets. A growing business signals strength and attracts more investors. Third is survival, and this is especially critical for new or small businesses. In the early years, just staying operational is a victory. Many businesses prioritize survival over profit at the start. Fourth is market share, and this is all about capturing a larger portion of customers in the industry. A business with a high market share has more influence, negotiating power, and brand recognition. And finally, for private sector businesses, is corporate social responsibility or CSR. Today, businesses are expected to go beyond just making money. They must consider their impact on employees, communities, and the environment. Think of a company that sources materials ethically or donates to local schools. Corporate social responsibility builds trust and long-term loyalty. Now let's move to public sector businesses or organizations. And of course, we know these are owned and run by the government, and they exist primarily to serve the population. Examples include public hospitals, government schools, water utilities, and transport services. Now, the central objective here is the welfare of citizens. That is all about providing essential services to all people regardless of their ability to pay. A government hospital, for instance, does not turn away a patient because they cannot afford treatment. Public sector organizations also aim for equity and access. That is, making sure services reach rural areas, low-income communities, and vulnerable groups. They may also have a financial objective, not necessarily to make large profit, but at a minimum to cover their costs, or, in some cases, generate revenue that is reinvested back into public services. Any surplus goes back to the government, not private shareholders. Now, the third type of businesses is social enterprises, and these are fascinating because they sit right in between private and public organizations. They operate like a business, but their driving force is a social or environmental mission, because for any business to be a social enterprise, it aims at achieving social impact, environmental goals, and then also, of course, make some profit. So examples include organizations that train unemployed youth with business skills, companies that sell products made by artisans in disadvantaged communities, or environmental groups that generate income from ecotourism. Profit is still important, but it's a means to an end, not the end itself. Any profits made are reinvested into the social or environmental cause, because the social impact, which is all about improving lives, reducing inequality, and empowering communities, is the heartbeat of a social enterprise. Why do these business objectives matter in the first place? Firstly, objectives provide a sense of direction. Without a clear goal, a business is like a ship without a compass. Objectives tell every employee, manager, and stakeholder where the organization is heading and what decisions to make along the way. Secondly, objectives help assess success or failure. If your objective was to grow revenue by 20% this year, you can measure whether you achieved it. Without an objective, how would you even know if you succeeded? Thirdly, objectives motivate and align teams. When people understand the goal, they work together with purpose. A shared objective creates unity and accountability. Objectives also support decision making. When faced with choices, which market to enter, which product to develop, a clear objective acts as a filter. You ask, does this decision move us closer to our goal? And then finally, objectives attract resources because investors, donors, lenders, and talented employees are drawn to organizations with clear, compelling goals. A well-defined objective signals credibility and focus. Now, to wrap it up, every business needs a reason to exist beyond just making money. That reason is the objective, and it will shape every decision you make, every person you hire, and every customer you serve.